All right. Thank you, everybody, for joining us for our editorial webinar today, What the U.S. Stimulus Package Means for Travel Businesses. Today, we'll be diving into the $2 trillion U.S. stimulus package and its potential impact on the travel industry. This webinar is a part of Skift's rapid response of tactical ideas, analysis, and resilience to the industry as it responds to the coronavirus challenge. You can view all of our coverage at skift.com, and as a reminder, you can also support Skift's independent journalism at myskift.com/support. Today, we are thrilled to have the Executive Vice President of Public Affairs and Policy at the U.S. Travel Association, Tori Barnes, join us on this webinar. But first, we're going to kick things off with a high-level view from our editorial team. Leading today's interview and discussion will be Skift's global tourism reporter, Rosie Spinks, senior analyst, Skift Airline Weekly, Jay Shabbat, Skift Senior Research Analyst Seth Borko, and moderating will be editor of Skift Airline Weekly, Madhu Krishna.
Thank you, Brian. This is Madhu Krishna. I'm the editor of Skift Airline Weekly. And what we're here to do today is look at the $2 trillion fiscal stimulus, the CARES Act, which is the largest fiscal stimulus in U.S. history. And a lot of it is earmarked or directed at the travel industry, which is at the forefront of this crisis, this pandemic. So I wanted to turn it over to Seth Borko to walk us through some of the scenarios. The questions everyone has, that we all have, are, is this enough cash, first? Second, and first, what are some of the scenarios that are being laid out in terms of the recovery? I mean, there's a lot of letters being thrown around, U, W, V, Ls. Seth, can you walk us through some of that?
Yeah, thanks, Madhu. So there's definitely like an alphabet soup out there that you'll sometimes see when we talk about, economic recoveries. The big ones, and the one that we're hoping for, the big one is that V-shaped recovery, which is where the economy goes down, but then really quickly corrects and recovers quite quickly. That's that sharp V. It doesn't really spend much time at the bottom of the economic contraction. That's what we're hoping for. You've got some other letters out there too. Actually, I think we're going to put up a poll, so we'll ask you and we'll get your opinion, you audience members' opinion. But the other types out there would be like a U-shaped recovery. You sometimes hear that one. That's basically the same thing, but it just takes a little longer. The economy contracts, it stalls for a bit, but eventually it gets going again and comes back up. The W shape you see there, that's you sometimes hear that like a double dip recession. That's like, things come back up, they come back down, it's choppy. We really struggle to get it on our feet and to stay stabilized. And then that final one, L shape, that's the worst one. That's the economy kind of comes down and doesn't really come back for a very long time. That's sort of what you saw, if you guys remember this, like that's what you saw in like Japan with like a lost decade of economic productivity. So that's a really bad scenario. So I'll put this poll to you. I'll just say, what do we think is going to happen? It's going to be very hard to tell because we're really living through unprecedented times. And this is certainly not the kind of economic crisis or recession that we've really seen in living memory. It's because of a virus, an outbreak. It's not because of a bank crisis like we saw last time. And so the issue is that, as we all know, to fight this virus, the government is kind of trying to freeze the economy. I'm kind of thinking about it like, in Star Wars when they put Han Solo in that carbonite material, they freeze him, and then then they take him out a little bit later. That's kind of what the U.S. government is trying to do here, is to say, all right, let's see, can we take this and can we kind of, freeze the economy, wait for this virus to pass, and then when we reopen it, how quickly will things come back? And the answer to how quickly things come back is going to very much depend on how we respond today. So let's go to that next slide we have, because I think this is the important thing to think about, is how quickly can the economy come back after a shutdown? And a big part of that is going to be how many businesses can make it through this, can survive, can continue to pay their employees, and continue to reopen once the economy reopens. This is from a study that the JP Morgan Chase Institute did a couple of years ago, but I think it's still good. And they found that the average small business has just a 27-day cash buffer, and many actually even have less. So, when we put the economy in a freeze, we can't keep it in a freeze for all that long without doing some real serious damage. And just by the way, and we there's other numbers out there, but just by the way, leisure and hospitality as a sector, that's not even including airlines. Leisure and hospitality as a sector is like 12% of U.S. employment. Retail, think big box stores, coffee shops, that's another 12% of U.S. private sector employment. And then there's plenty more within the travel industry and the airlines or all sorts of things that maybe don't even fall into that. But just with those two sectors alone, you're looking at 24, quarter of the private workforce at kind of on pause because of this. So there's a really big economic impact, and there's not that many cash buffer days to really see us through it. So that's where the stimulus package comes in. If you go to that next slide. And so what the government is trying to do is extend the amount of time that we can wait out and hunker down the coronavirus. And they're doing that by giving out a lot of cash as much as they can. I would say there's really 4 big buckets of cash that are being put out. The first, about 30%, $600 billion, is going to individuals. The second, about $500 billion, is going to go to large corporations. I'll talk a little more about that. Then the next, I think perhaps most important for this conversation, is the amount going to small businesses. That's about $377 billion. And then the fourth bucket, I'm lumping them together, but it's state and local governments as well as public services like hospitals and drug companies as well. So those are your 4 buckets. It's states and hospitals, small businesses, large businesses, and individuals. I just want to focus on the amount of money to small businesses. So I was just kind of, there's 29 million, almost 30 million small businesses in the US, and many of them are going to be affected by this. And I was just trying to do some quick math in my head for this in terms of how much these businesses, actually pay in operating expenses. And, I got a number like 2.7 trillion in payrolls that businesses pay annually. So on a monthly basis, so let me just put it this way. On a monthly basis, small businesses are paying something like 225 billion in salaries. And this bill gives 350 billion to small businesses. So this is kind of like a month's salary, a little bit more. There's other expenses besides salary. You've got mortgages, you've got insurance, you've got all sorts of things, things you need to pay. So this is like basically a month's of operating expenses coming from the government. Plus you have a month's cash buffer in the bank account. So we kind of have, like, I would say right now, I'm kind of back of the envelope, but we may have a 2-month buffer built in here. And the hope is that things can start to recover after that. So that's sort of where we're at. And I'll just say on the loans to large businesses, that's where there's some very specific carve outs for the travel industry. So of that 500 billion to large corporates, about 50 billion of that is going to go towards airlines. And the other interesting thing about that piece is that that's actually going to be loaned out and therefore get a little bit of a multiplier in that. It'll probably be more, the economic impact will be more than 500 billion, but I'll pause there. And I see we got our poll results back. So most of you said U-shaped. In other words, it won't be as quick as maybe we're hoping, but it won't be perhaps a permanent impairment to the industry. So I think that makes a lot of sense. But I'll throw it back to you, Madhu.
Sure. Thanks, Seth. I want to bring Tori into this conversation. Tori, as mentioned, is the Executive Vice President for Public Affairs and Policy at U.S. Travel. You were the industries you represent, the businesses you represent, are really at the front lines of this crisis. But I think I think it would be interesting to hear sort of the outreach and the education U.S. Travel engaged in the lead up to the CARES Act, how you engaged with lawmakers and stakeholders. So if we could start there, Tori. Tori, I think your microphone's on mute.
You're right, it was.
This
technology thing. Thanks so much for having me. Good to be here today and talk to y'all. I think it's important to note that the travel industry was really coming off of, a really strong decade. Brand USA had just been reauthorized for another 7 years. We had USMCA passed into law, looking at the 10 years of strong growth. And we're really preparing for, a strong year of new policy priorities and ways to enhance the industry. And then coronavirus happened. And, I think we were actually up with Skift in late January when all of the news was breaking, around all of the impacts, and we could see right then that we were going to have to be a voice of first and foremost education for the industry in how we could get information as it was coming out. I think that coming back on the train from New York when I was up there, I was on the phone with the White House already and listening to all of the President's coronavirus task force work that was being done in those early days. And we worked really closely with CDC and HHS, with the White House and other agencies to make sure that we were able to communicate information and make folks aware of how to manage the situation. Obviously, with the international inbound markets being first and foremost impacted, the airports where folks were coming back from China, and then the rest of the world, as well as with the cancellation of meetings and events, which obviously, as that all unfolded, was dramatic and impactful in ways that we would have never been able to project that it would get to this point at that time. But we built a really strong hub of information that we have been sending out on a weekly basis. And now we also have some really important data that we're sharing. I think, to your point on the recovery, we think as many as 5.9 million jobs within the travel industry alone could be lost before the end of May, and a $910 billion in lost spending. And so, early when we kind of got that data back in late February, early March, we recognized fully that we were going to need to be asking for really significant and bold help from the government in a relief to build a bridge to get to where we can actually advocate for full-on recovery. Which is obviously a priority now, but this relief is so critical. So Roger Dow, our president and CEO, went to the White House. He met with the president and the vice president and secretary of commerce, along with some other CEOs within our industry in the hotel space. And really said, we need you all to do something significant. And in our original asks with Congress and the administration, we said we need dedicated funding of $250 billion. We really think grants would have been the right answer there, because the loan process, as we're seeing with the initial guidance even coming out of SBA yesterday, is just, it's taking too long. I mean, to Seth's point, there's only this small buffer of maybe 8 weeks where folks can actually keep employees. And as we're seeing across the industry, there are already so many furloughs and layoffs. So we advocated not only to the president and to the White House, to the NEC, to all of the administration folks, but really worked closely with champions in Congress and have a really strong bipartisan group of members that were advocating not only for the $350 billion in small business loans, but also the 450 plus to 500 billion when you pull in the airlines, of champions that really recognized, first, they knew they had an airline problem, and that is a critical part of our travel ecosystem. But we were really advocating for the rest of the industry, so impacted, and needing so much significant help. So, the first version of the bill that came out called for $150 billion. We were really pleased that we were able to make significant changes so that we have the $350 billion pot in the small business section and the $450 billion plus in the Treasury Economic Stabilization Fund loans, which obviously are yet to be determined how they will be dispersed, but we're highly engaged in communicating with Treasury to expedite that guidance. Champions like Senators Blunt and Gardner, Cortez Masto and Klobuchar, Rubio and Collins are a handful of folks that we were highly engaged with to make sure that we were able to get real relief for our industry. But I think most importantly, it's not done, right? We have to continue now working with the agencies to get that the loan processes processes expedited. And then we're already thinking really hard around what relief we'll continue to need to ask for in the phase 4 package, which hopefully will be worked on, obviously throughout this month, but when Congress returns in early May.
I have a couple of follow-up questions for you. So, U.S. travel was really out there early on, saying that this will be a problem and this will be a crisis in the industry. When did you start to see buy-in from lawmakers that there will be a need for a massive fiscal stimulus for the travel industry in particular?
Yeah, I think, we had once we got the data back, and the initial data was I think there was a recognition that it was going to be bad, but when you compounded that sort of decline in international inbound travel, and I think important to note is that so many of our champions in Congress recognize, because we just got Brand USA reauthorized, how economically important that international traveler spend is in the US, that that continued engagement had helped, folks to be up and aware of the needs and how that would impact us. But then you start to see the cancellation of meetings and events and broader business kind of, closing off, unnecessary travel. And when we started to get the feedback and data on, the initial numbers were going to be a little bit over 4.6 million jobs by the end of April, and $500+ billion in lost spend. A couple weeks later, the revised numbers show 910 billion in lost spend and 5.9 million jobs before the end of May, or by May. That I think was really compelling and helped lawmakers understand the magnitude of the problem.
Great. My second question for you is, you mentioned in your earlier that the job isn't done, that there's a need for more. What are you sort of forecasting for the next phase of stimulus?
Sure. So in the small business loan bucket, for example, there is the interruption loans, which, first and foremost, don't encompass all of the travel industry. So we really need more help for the 501c6s. So those might be destination marketing offices, organizations, convention centers. So there's a grouping of folks that are eligible for the disaster loans, eligible for the economic stabilization fund, which we don't have the rules for yet. But really this huge population that is so critical to the front lines of our destination marketing that are not, easily able to get forgivable loans, which the last thing we want is for businesses across our industry to be having to take on significant amounts of debt. And so the intent of the interruption loan is really to be able to keep employees on, and be able to keep your business moving. And without having the 501c6s in there, that's a problem. Additionally, the forgivable part of the loan's only for about 8 weeks, but the loan really, you can apply for it goes through June. You can apply for it up to the end of April, but it goes through June. I mean, I think we are seeing that as it is extended over and over, how long people need to stay at home. Hopefully we'll get to a point in the public health crisis we'll be able to overcome that. But until then, we can't go through the process where it takes 3 or 4 weeks to actually get something enacted, and then another 2 or 3 weeks to actually get the funds dispersed. I mean, back to Seth's previous point, people don't have that kind of money to be able to keep the lights on and pay their employees. And so unless we seek to replenish the funds now in this next phase, and at least make the loans replenish the funds and extend the period for which you may be able to apply for the loan to the end of the year, quite frankly, we don't think it's enough. I think there's some other technical fixes that we'll be seeking, and then some new things around recovery, like how do we actually motivate folks to get moving again? How do we incentivize them through domestic travel promotion? There are just a lot of things that we need to be thinking about now, because it does take some time for a bill to become a law, and it's critical for our industry that's been so hard hit at the front end of this, let alone what the rest of the economy will be feeling over time.
Great, thank you, Tori. Now we'll be pulling you into the sector-specific conversations as we have them now, but I wanted to turn now to our Skift editorial team to talk about the individual travel sectors and how they may benefit or be affected by this crisis or benefit from the CARES Act. I wanted to start with Rosie Spinks, our global tourism reporter based in London, to talk about the cruise industry. And this has gotten a lot of news. Obviously, the cruise industry is hurting. Cruise lines have suspended operations for a couple of months, but they're not, unlike airlines, they're not specifically earmarked for any funds in the CARES Act, right, Rosie?
Yeah, that's correct. And, as someone who's pays close attention to the cruise industry, it's certainly been striking to see it so much in the news over the past few weeks, because that's certainly not normally the case. So the CARES Act doesn't mention the cruise industry specifically when it comes to funds. One thing we do know from our reporting, though, is that there was not a lot of political will on either side of the aisle to provide, federal assistance to the industry. And as such, there's a key clause in the bill that says that businesses eligible to loans have to be created or organized in the United States or under the laws of the United States, and has significant operations and a majority of its employees based in the United States. So it's been said in various, I think, Wall Street Journal reporting that clause was specifically aimed at the cruise industry. And as many of our audience members will know, beyond their Miami headquarters, the three largest cruise lines are fundamentally not American companies. And actually something happened today, I think, which was really striking and really illustrated that, which was that the US Coast Guard is asking the cruise vessels that are currently sort of stranded, for lack of a better word, off the coast of Florida to seek assistance from their flag state, which in many cases I think is the Bahamas. So essentially, because many cruise ships are not registered in the United States, the Coast Guard is saying, hey, go seek assistance in docking your ships from the state that you pay your registration fees, et cetera, to. So this is, to me, this is amazing. This is sort of the cruise industry's business model kind of coming home to roost in a sense, because, they're not American companies, and the US Coast Guard is sort of strapped for resources right now, because all these ships with, unwell and well passengers are trying to find a place to dock. Now, going back to the bill, the CLIA, the cruise industry's lobby, they said they didn't want to bail out. And they've said that all along. And they said their main lobbying efforts were focused on helping small businesses that support the industry in the US. So 75% of cruises are booked through a travel advisor. And that's interesting, because if you watched a press conference, recently, of Donald Trump's, you maybe have heard him say he wanted to help the cruise industry. He can't seem to stop talking about it. So that kind of goes in a way. It's in opposition to what the industry themselves have said. There's still some concern among certain anti-cruise groups that they will try to argue that they are organized in the United States, and they've certainly done wilder things before. So some groups are trying to ensure that the language of the bill is properly enforced. But at this time, they haven't received any funds, and they are certainly raising cash in other venues because they need it.
Before I get to my question, I believe we have a poll that we can run on the cruise industry just to get some audience feedback on the recovery. But Rosie, so the bill says companies that are organized in the U.S. Do you think that, and the cruise industry, as you mentioned, has not really said it wants direct loans or payments, but do you think there's a sort of backdoor way they can get further stimulus or apply for funds through the CARES Act?
I don't know. Stranger things have happened. I don't know that it would be through the CARES Act. There's a coalition of environmental groups who sort of helped congresspeople draft the bill, and they were sort of consulting on what conditions should be attached to any assistance given to the cruise lines. As I said, that didn't end up happening. That group is now sort of saying, hey, this language is in there for a reason. Don't give them funds. The wrinkle here and the kind of unpredictable thing, I think, is Donald Trump. We know he's kind of a longtime friend the industry and specifically of Carnival Mickey Aronson. So it's I'm not one to make a prediction there, but I don't think it will happen through the mechanism of this act.
But one thing you mentioned, you said that the cruise industry is, as a sort of writ large, is looking for support for travel agents, and that because that's how the majority of their tickets are sold.
Yes.
How does the CARES Act benefit, or what sort of support does the CARES Act provide to the travel agent community?
Yeah, so there's quite a bit of support in there, and the American Society of Travel Advisors did quite a bit of lobbying on this front. 98% of travel advisors are small businesses. So all of those businesses are entitled to the Small Business Administration loans that are in the bill. There's a couple different varieties that Tori mentioned. The new program is loans up to 10 million, and as Tori said, a lot of that can be forgiven if it's used to pay salaries and stop people from being laid off. I think that's sort of the reason behind that program. But another thing that was a sort of big win for the travel advisor lobby group is that self-employed and independent contractors are entitled to unemployment benefits, which I think is a sort of departure from the norm that the CARES Act includes. And in addition, the travel advisor industry was also included in a pot of money set aside for the airline industry. The term in the bill is ticket agents, which is kind of the statutory term for travel advisors. So that's another pot of money that sector is entitled to. But I wonder, Tori, did you want to add anything about the travel advisor industry and sort of how they've been helped by the bill?
Sure. Yeah, no, I mean, I think you're spot on. There are different kinds of loans within the small business section. There are small business disaster loans that are up to 2 million that you can apply for now. The application process for the interruption loans, the paycheck protection piece will be up and running on April 3rd. And as Rosie noted, that is where the loan forgiveness opportunities lie. But even if you wanted to get on an application in on the disaster side, you could do that and convert it over, refinance it into the interruption loan once that's established. I think the one thing that I would raise that we are hearing, and so this is one piece of concern that we're seeking clarity on, is that a lot of so much is on the banks, and the likelihood of them needing to actually satisfy their current customers before they move on to new customers is something that I think, because of our industry not necessarily having across the board recognition or history of needing to apply for these kinds of loans, they may not already have pre-existing relationships with banks, and that could be a hiccup that we see as this money tries to, as we try to access that money. So, I would recommend starting the process as quickly as possible for folks like these agents, and doing so in the disaster relief, and then recognizing you could refinance that over the interruption loan.
Yeah, and I'll add the Small Business Administration put out some preliminary guidance, I think yesterday or Monday, and I believe the application process is meant to officially kick off on Friday. Yeah. And one other thing I wanted to say, because it was one of the audience questions, is that there was a question that was said something along the lines of, if I'm an LLC, so I'm not an independent contractor, but I don't have any employees, it's just me in my company, am I entitled to these small business loans? And my understanding is that yes, you are, and that was something that ASTA, the travel advisor lobby group, really pushed for.
Yeah, and it's our understanding that is accurate.
Great. Now, how in terms of destination market, and this is a question for both Tori and Rosie, but let's start with Tori. How destination marketing organizations are also hurting right now. How are they covered under the CARES Act?
So it depends on their structure. So some are 501c3, some are 501c4, some are 501c6, some are political subdivisions, so they may be part government entity. So there are different opportunities for them throughout the bill. We do have a handy kind of cheat sheet on our website at ustravel.org/relief resources, where you can kind of, based on what your tax status is, find out what parts of the bill you're eligible for. But most of the 501c3s are able to do anything within the small business area. So that would be the small business disaster loans, the small business express loans, the small business interruption loans. So they would be able to apply for any of those, as well as the emergency stabilization fund, although you can't be a recipient of the small business funds and a recipient of the emergency stabilization fund. So just kind of need to make sure which one would work better. And we don't yet have the guidance again on the emergency stabilization fund. For 501c6s, they are eligible for the disaster loans of up to $2 million. And then they would also be eligible for the disaster loans. I'm sorry, the stabilization fund. And then the 501c4s fall into that same bucket as well. I would note that there is also within the bill, more on the appropriation side, was $5 billion of funding for community development block grants to be dispersed. $2 billion of that after 30 days of enactment, so April 27th, and then 45 days after another billion, and then $2 billion over the period of 2020. First and foremost, a lot of that money will probably go towards health-related issues around COVID. But we would expect that this money is something that DMOs could tap into and state tourism offices could tap into for economic recovery, for travel promotion potentially. And it's something that's been done before around like hurricane relief and other natural disaster relief. So it's something that some of the entities, and it is dispersed on a formula-based from the federal government throughout states and localities. So it is a little technical, but it's something that DMOs and state tourism offices should be aware of and asking with their local and state governments, because that's some money that can also help from an economic recovery perspective, separate and distinct from the immediate loans that they need to keep lights on and payroll going.
Well, here's a question from a listener for Tori. Will the small SBA loans take the form of an outright disbursement of the approved amount, or will it be set up as a line of credit to be used on an as-needed basis?
There are different parts depending on which of the loans that you apply for that could be a line of credit. There's also within the disaster piece a $10,000 that you can get right up front that is forgivable. But some of the guidance yet is not fully put out. You know, Rosie mentioned that for the interruption loans, for example, they did put out some initial guidance yesterday, but it's really not very thorough. We're expecting to see some more today or tomorrow, hopefully today. And so that will hopefully give more clarity for that.
Great, thanks. I wanted to turn to Seth to talk about hotels. And, you know, an audience, a listener raised a question that the hotel industry is pretty fragmented. How was the industry, as you know, hospitality writ large, how is it covered under the CARES Act?
Yeah, that's spot on. And Tori and anyone else, please jump in and correct me and add in. But the real benefit I think to the hotel industry is going to come from those small business loans. So the way it's going to work is it's this payroll protection plan. You can go online to sba.gov. They just put out the details for it and the very first form of the loan application, so you can see a sample application, the kind of thing you'd have to give to your banker. And what it does is it's a loan available for, I think the number is 2.5 times your monthly average SAP payroll. And there's some exclusions there. Like if you have people on payroll making over 100K, you can't count that. But it's something like, so you have your payroll is 100K, you can take out a 250K loan. And that loan, I think it's 2 years, 0.5% interest rate. It's a very low, cheap financing. And then the nice thing is that if there's a lot more nuance to what I'm saying, but if you don't lay off any employees and you don't reduce their salaries, that loan is then forgiven. So it kind of turns into a bit of a grant. And I think, and I'm going to ask you to jump in on this, Tori, because I think it's interesting, but there's a nice carve out for the hotel sector where instead of looking at the small business as just as an overall business, it actually looks at the hotel businesses on the individual property level. Is that right, Tori?
Yeah, it does look at that. There is some question on who and how it would work as it relates to the management company or the owner. So there's some questions that we are seeking guidance from SBA and Treasury on that piece. But yeah, it is a per entity per physical location. So if you're an owner, let's say, and you have 3 properties and 2 of them have under 500, then each of those properties would be eligible.
Yeah, and that's so important because I think I was just looking, these are some numbers, but like I think 50% of hotel firms, are maybe small businesses. But if you look at the actual establishment level, at the actual property level, I think 90% of hotel establishments have less than 100 employees. And I think there's a carve out here. Oh, I'm sorry, I didn't add this. Like I think the cap is 500 employees to be considered a small business, right, Tori?
Yes.
So if you have under 500 people, we need clarification, but it reads as if you have under 500 people at your property, you can kind of carve out that property, and each property can apply separately for a loan up to 2.5 times payroll, forgivable if you don't reduce salaries. Did I understand that right?
Yeah, you also, if you had laid off folks and you bring them back on before the end of April, I think before April 27th, then you also could be eligible for the forgiveness part of it.
Yeah.
I would say we also, in COVID-4 or phase 4, we also think that 2.5 times payroll should be extended for the length of the current legislation to June. It should be 4 times payroll and operating costs, because we think that would be more of an incentive to be able to bring employees back or keep them on.
And Tori, I just want to jump in before we switch away from small business. An audience member asked, can someone apply for both the payment payroll protection loan as well as the economic injury disaster loan? And I know U.S. Travel has some guidance on that.
Yeah, it's our understanding that you cannot apply for both of them. And so really the Emergency Stabilization Fund is more geared towards medium and larger businesses, and the small business loans are geared towards small businesses. And the forgivable components are really in the small business section. Because the 501c6s are not eligible for the PPP plan, the payroll protection plan, that's one where we're seeking more help for them in the Emergency Stabilization Fund. But generally speaking, if you're under 500 employees, you should look at the SBA plans, and if you're over 500, the Economic Stabilization Plan.
Could you apply for both the new SBA program as well as the existing SBA loan program? I may have misspoke. The Economic Injury Disaster Loan, is that?
If you apply now for the disaster loan, you should be able to refinance and convert it into the interruption loan once that application process, as you noted already, that will open up on Friday. Right. But I would advise you get the process started now, and then look at the refinancing.
I wanted to address, we've got a lot of people in the chat. I appreciate your comments. One, we did get a question about the larger hotel groups, the Marriotts and the Hiltons of the world. And that would fall under the Exchange Stabilization Fund you're talking about, that bigger program. That is basically, I think $425 billion. That's going basically to, I'll just give you some details there, to the Federal Reserve, and they're going to use that to make a loan. So when you make a loan off of your capital base, you can actually leverage that. So the Fed might be able to make loans of more than $400 billion. I've heard numbers as high as 10x leverage, as much as $4 trillion in loans. And they're also going to be buying corporate bonds. So if you're a large, if you're a large company like a Marriott that can actually issue corporate debt, you're definitely going to want to go. That's your relief package is taking out loans from the central bank. And if you're a small business, you're going for the payroll protection or the existing small business EIDL loans.
Great, thanks. And I wanted to bring Jay Shabbat into the conversation to talk about the other big headline, one of the other big headlines in this recovery, and that's Airlines. So if we also have a poll to run while Jay's speaking. Jay, about $50 billion has been earmarked in the CARES Act for the airline industry, 25 in grants and 25 in loans. Can you break that down for us?
Yeah, right. So that key number is 50 billion and breaks down into, as you said, 25 billion in loans or loan guarantees, and the other 25 in what you might call payroll grants. So that 25 billion in payroll grants will theoretically cover the labor costs of airlines over the next 6 months. There are conditions attached to both sets of 25 billion. I don't think I'm not going to run through all of them now, but some of the highlights are that airlines can't do stock buybacks. It was kind of a controversial thing they did, pre-crisis. They can't pay certain amounts of executive bonuses, things like that. So several conditions attached. Sort of the one controversial one, if that's the right word, or one that's sort of getting a lot of discussion now, is the idea that the government can actually take stakes in the airlines in exchange for the money that they're getting. And this could be, at first it looked like they might take stakes. My understanding anyway was that the stakes would only be in exchange for the loans. But it looks now that it's possible they might actually make that condition for the payroll grants as well. So we'll see. It's kind of all in flux right now. The Treasury Department is just sort of putting out guidance as we speak. So we'll find out. Now recall that in prior bailouts, we can even look back to the airline industry itself. After 9/11, the airlines received a federal money, and one of the conditions was, in fact, that the Treasury Department took stakes in the airlines, and they wound up making pretty good money for the taxpayer. Wound up being beneficial. Will that happen again? We'll see. The other question is big question here with the loans on the loan portion is do the airlines even want to take the loans? Now they asked for it. They asked for the money to be there. You might think of it as sort of an emergency backstop, but with the conditions and maybe even without the conditions, do they really need the money? A lot of that depends on what the demand environment looks like after September in the fall. Because right now, a lot of airlines, between all the costs that they're cutting and the money that they've been able to get from through private sector loans, they might not need that government money. So kind of all eyes are on the fall to see what conditions look like then. And frankly, nobody knows. It's sort of guessing. As Seth mentioned in his talk,
Jay,
it's all a guessing game of the economy. Yes, sir. Go ahead, Madhu.
If I'm reading what the Treasury Department put out right, the loans are available to airlines that cannot raise money elsewhere, correct, or do not have access to credit. So, I mean, unlike in past when airlines have needed bailouts in the past, the U.S. airline industry right now is in great financial shape, or was until March.
Yeah, correct. So they did go into this crisis in a healthy state. That's true, and with lots of lines of credit with banks already open that they're drawing down now. In fact, several airlines even entered in some brand new loans, which is sort of an expression of confidence in the industry that the banks believe that the airlines can repay when this is all over. They also believe that their assets that they're pledging as collateral are going to be worth something when this crisis is all over. When I talk about assets, we're mostly talking about aircraft, maybe some airport slots, some other things, but aircraft's essential. So, but you are right, Madhu. There is in the guidelines that the Treasury just issued, it does stipulate that if you want some of this grant money, or excuse me, not the grant money, the loan money, you can't. You have to be in a situation where you can't get the money elsewhere. So what you said is correct.
We have the results of our poll, and it looks like most respondents, about 43%, think demand for air travel will return to pre-pandemic levels in a year. 26% think 18 months. So Jay, I wanted to leap off of that with you. It's a two-part question. When do you see demand for air travel returning to what it was before the pandemic? And secondly, with United President Scott Kirby recently and Delta CEO Ed Bastian recently, both said that their airlines will be smaller. So what is this? So like my two-part question is, A, when do you think demand will return? And B, what does it mean for the traveler if airlines are in fact smaller than they were in December?
Yeah, so really to answer, I mean, it's not a very exciting answer. The honest answer to your first question is that it's a guessing game. We really have no idea. There are cases there are optimistic cases to be made. There are pessimistic cases to be made. If anybody, perhaps in the Q&A, we can go through some of them, or it's something that we're writing a lot about in Airline Weekly. But just to throw a couple things out there, jet fuel prices are extremely, extremely low, which suggests that airlines are going to be able to charge very low prices. So that could stimulate some demand. The banking industry went into this crisis pretty healthy. They're an exceptionally large airline customer. They spend a lot of money on air travel. The healthcare sector, in a place like we were kind of going through some different markets that might come out of this relatively healthy. A place like Minneapolis, we just threw out there because they have a ton of healthcare companies. Maybe that's a market that performs pretty decently. There's a lot of pent up demand. People want to travel. I was telling someone that my dad said to me the other day that I'm saving so much money, Jay. And I said, what do you mean you're saving so much money? And I said, well, mom is not spending any money because she can't go to the mall. So there are people. I'm of course being humorous, but there are think about retirees. I mean, retirees are getting Social Security. A lot of retirees are living off Social Security. Those Social Security checks are not interrupted. They're in fact getting even more money with these stimulus checks. So that's a segment of the population that may bounce back very quickly. So all those things kind of form the optimistic view. The pessimistic view, of course, Seth mentioned some of those scenarios where we might be in a very, very just deep economic recession where there's just tremendous amount of job losses. And this money, this $2 trillion we're talking about today is just simply not enough. Your second question, I think, was about how some of the airlines are maybe thinking or maybe sort of projecting what their potential size will be come the fall when the payroll grants run out. And that will depend on sort of the first part of the question, the answer to the first part of the question, which is, yeah, if demand is healthy, then perhaps they can maintain the size they are today. If things are really bad, if the economy is deeper, if people are scared to travel, just physically afraid to get on airplanes because they're afraid they're going to get sick or whatever, well, then at that point, there probably will there just inevitably be some difficult discussions that airlines are going to have with their unions. And they probably will have to be smaller than they are today.
Great, and this is a question for both Tori and Jay. Airports got $10 billion in the CARES Act, but the Airports Council International North America says that the losses to airports will be more than $14 billion. For Tori, I guess the question is do you think there will be more in a phase 4 bill for airports to support airports?
So, I mean, yeah, there's 10 billion in this package. I think we'll absolutely be advocating for more. I mean, we're having a conversation later today with some of the major gateway hub airports around the needs for phase 4. And I think it is something that we'll have to advocate for. And I think an important point that I keep thinking about and was thinking through when Jay was speaking, and because the airline sector is obviously an important part of this whole ecosystem, when we talk about bailouts, this isn't really a bailout. I mean, I think bailout, and I'm not saying that Jay was saying that at all, but I know everyone terms it as a bailout. It's really a necessity, right? I mean, these businesses don't have customers because the government, rightly so, because of the public health crisis, is telling folks that they need to stay home. And so when we say bailout, and maybe some of the banks were in that vein in the financial crisis, not all of them though, and in some cases, we have to really just think about the fact that if we want to keep the economy strong and we want to encourage folks to get back out and moving and have commerce flow again after the public health crisis, then we need to help these businesses now, and we need to help people stay employed, or else it's going to be worse for the government in the long run. So rather than having folks incur more debt and paint it like these are bad companies and bad businesses that have done something wrong, we should look at it for what it is, which is that folks are staying home. Like the wife isn't going to the shopping. I mean, I know I've been saying the only thing I'm spending money on is wine and fresh flowers. So, I think that at the end of the day, we really need to be helping our businesses and think about it as a relief to keep the economy moving through as a bridge until we can fully recover and advocate to our elected leaders that they're doing what's in the best interest for the overall country.
That's a great point, Tori. As I mentioned before, the airlines, they really did go into this very healthy. This is not a situation where they were stumbling and now they're using this as an excuse to get taxpayer money. You do see some of that across the world. They're Alitalia is kind of the example that everyone brings up. They were, they probably, in a manner of speaking, this is probably the best thing that's happened to them because they were about to go out of business and now the government sort of has a mandate to come in and rescue them. That is not the situation in the U.S. In the U.S., the airlines went in very healthy, and they just are in a situation where their whole their entire revenue base collapsed, and they will be extremely important to the recovery also. Even as we speak right now, even before the recovery even gets underway, they're important providers of cargo transport and just think transporting doctors and researchers and things like that. So it is you kind of have to think of them, and that's the reason. You might ask, why were airlines singled out for relief, where so many industries were kind of just bundled up into that sort of larger groupings. But the answer is that airlines are systemically important to both the economy today and for it to recover.
Right, and airports are a source of a lot of infrastructure jobs. They spend a lot of money on capital improvement programs, and there's almost no better way to put people to work than through infrastructure. Tori, do you have any clarity on what sort of infrastructure funding might come in a phase 4?
I mean, the speakers called for, significant infrastructure, in this phase. Just generally, I think we're expecting that we would see some kind of potential initial plan today. We will be, as I noted earlier, fighting to ensure that we have additional funding for the airports and for infrastructure in the right way. I think it's just also important to note that overall relief is still something that's needed in even bigger ways, and I think that's really where we'll be focused on phase 4. Some of the infrastructure pieces that are important, but I mean, at the end of the day, the manager at a hotel isn't going to go build bridges or airport infrastructure. So we need to make sure that all parts of our industry are having the appropriate relief that they need, whether they are able to get it in phase 3 or if we need it for them in phase 4.
Right. And I know we're kind of close to time, but there were a couple of listener questions on short-term rentals, and just wanted to touch on that really quickly, Rosie, if you know, and Seth, short-term rental companies can are they covered in the CARES Act?
My understanding is that some of the hosts may be, if they file for assistance as sort of very small business owners. But at the level of the companies themselves, I'm less clear on that. Tori, or Seth, do you want to take that?
Well, I imagine on the short-term rental side, it's going to very much depend how they're structured. If it's an individual host, then they're eligible for, we didn't even talk about the individual, $1,200 that people are potentially getting. You're eligible for that. But it would very, because it's such a diverse industry, how it's structured is so different. I think it would depend if they're structured as a small business or structured as an individual.
I think if you're filing a 1099, then you're eligible. And if you're not, then you're not.
Yeah.
Great. And also another listener question was about OTAs, online travel agencies, and are they do you have any sense on how they are covered under the CARES Act?
So I'll also, and please jump in again, anyone else, and Tori, I would imagine that I haven't seen anything specifically carved out for them. Rosie mentioned that ticket agents have a specific carve out. I don't think that would apply to the OTAs. But the fact is that the OTAs are pretty consolidated, pretty large companies that tap corporate debt markets. We just saw Expedia and Booking have all, Expedia just issued some bonds. So that kind of gets supported at a different level. That's less about payroll grants and forgivable loans. That's more about, again, the central bank making cheap financing available. That was sort of how I answered someone in the chat, something about car rentals. And again, Tori, is there anything specifically about car rentals or OTAs that you think I'm overlooking?
No, our understanding is that they'll be eligible for the Emergency Stabilization Fund, that Treasury Fed fund, and obviously we don't have the guidance out yet for that, but our understanding is they are eligible within that category.
And I want to turn this to Jay. If you look in your crystal ball, and this is also based on a listener question, are there any airlines that you think may not make it through this? Even with loan guarantees and grants, do you think there are any airlines that may not make it through this sustained loss of demand?
Well, if we're talking about the U.S., I think everybody's going to make it through. I think there just aren't as many airlines as there used to be, and with the exception of some, there are some tiny airlines out there that might have some issues, but the major ones, I think will all be okay. Now, you tell me that demand and revenues are still zero in December or next spring, then all bets are off. But I think airlines right now are going to be protected with this federal money through the summer, and then in the fall, if things start creeping back, they should be there'll be some wherewithal to downsize, to adjust their cost base, and sort of ride it out until the recovery happens in full bloom. So no, I don't think it's a situation like, after 9/11, for example, where we did see a lot of smaller airlines disappear and 3, 4, 5 big airlines went into bankruptcy. That's not the situation we're in now at all.
But do you think there will be fewer airlines? I mean, the last time there was a crisis, we saw a massive wave of consolidation. Do you think there's a regulatory appetite for further consolidation in the airline industry?
No, I don't think there's a regulatory appetite. And frankly, I think more importantly, I don't think there's an airline appetite for it. I think, what you had after 9/11, you had in those 6-7 years leading up to the Delta Northwest merger was the big one. You had a situation where the airline industry was extremely fragmented, the U.S. airline industry. It's not like that anymore, because in 2008, you had the Delta Northwest merger, then you had 2 big mergers in 2010, and you had another big one in 2013, another big one in 2015, or 16, whatever. But the point is that the airline today is already very consolidated. I don't think there's any appetite for mergers. Is it impossible that, a JetBlue or an Alaska might get together, some of the medium-sized guys? Maybe, but I don't even think there's any will there. I think airlines have their kind of their fortress markets, and they'll be able to defend them as long as, demand, again, I want to emphasize, all bets are off if demand is still extremely depressed 12 months from now. But as of right now, I do not foresee any consolidation.
Great. I think we have time for one last question. I just wanted to, I guess this would be for Tori and Rosie. It's about airport adjacent companies like travel retailers, Hudson News, etc. Are they eligible in any way that you know of for support?
I think it would depend on if they are, if they're a small business, or if they are, how they're structured, if they're a franchisee, if they're, part of a bigger conglomeration. I think if they're a franchisee, they would go into the bucket of, like, they're treated similarly to the hotels, if you have less than 500 employees bucket for PPP. If you were a small business, I think you would be able to apply as well. If you were part of, owned by a larger business, then it would probably be in the Economic Stabilization Fund. But I think it would depend on each entity's structure, but there should be help for them as well.
Great. Well, I want to thank all of you. Thank you, Tori, for joining us today.
Thanks for having me.
That was great. Seth, Rosie, and Jay, thanks for your contributions. And thank you to all of our attendees for joining us today on at Skift in this discussion on what the stimulus package means for travel businesses.
Thank you, everybody, for joining us. And we'd like to thank Tori Barnes of US Travel for joining today. We will be sharing the recording of this webinar later this afternoon. You can also view our upcoming online summits. We'll be sharing that information on skift.com. Thank you, everybody, again.